Welcome to FX Street webinars. My name is Steve Patterson. My contact information is all down here. And let's jump right in. Disclaimer, yada, yada, yada. Don't listen to me, listen to professional. I am just here giving you my opinions. Okay, for those of you who don't know anything about me, 27 years of experience. Currently a retail trader. I also run managed accounts, trade my own account for over 10 years. Live trading with Steve. Let's get right to the trades. Okay. So today we're just going to watch the market for an hour and or for 40 minutes, and we're going to just see what, I'm just going to share with you my thought processes today. The various trades that I'm looking at. I'm actually in a couple of trades right now. I just have to watch those trades as well too. I don't want to be too negligent here. But coming into today, the very first thing that I saw, if I were looking at the three major pairs, was the euro was basically up and down and chopped around during most of the London session and the Asian session. So one of the things that I would expect to happen would be kind of a continuation of that type of price action to continue. When I looked at the Aussie dollar, pretty much I saw the same thing. The market was up, the market was down. The market then tried to rally higher. We did a liquidity hunt up here, and then we just did a liquidity hunt down to the lows right now. And now the Aussie dollar is kind of bouncing around right now. James, I am actually in a short on the euro right now that I've been in for quite a while. I got a trailing stop on it. It's in my futures account, though, not in my actual Forex platform here. Sometimes I prefer to trade the futures markets over the over the actual Forex markets because they're cheaper. I can get a cheaper price for $3.50. I can do a round turn, where sometimes I have to pay the pips spread on the depending on the size of the order. I'll use the futures markets over the actual Forex markets. So looking at the GBP today, keep an eye on here. Pretty much the same story. The market messed around in Asia, and the market rallied down, took out some liquidity down here, and then did a strong rally up, and then basically sold off. Now, I like the short side a little bit more than I like the long side, just because right now, pretty much since since this morning, halfway through the London session, the market's been dropping, rallied, again. Same thing, pretty much the same thing with the euro. Drop, rally. So what actually happened was, if we take a look at the actual euro here, I saw this area up here as a good opportunity to grab a short, and I actually grabbed a short up around this area. I got a trailing stop on right now. I just hope it doesn't get triggered. I have a feeling it's going to get triggered. A little worried right now on that. Let me just babysit it for a few minutes here. I might actually take the trade in my actual Forex account. Again, I'm watching this area in and around here to get short and make a new low. I was expecting it to move shorter from here, but it didn't quite work like that. So right now I'm just looking for any type of resistance to make another leg down. Now, the market could very well pull back quite a lot more. before it actually does have another move down. But I do think that there is a potential for it to make another leg down. And the reason I say that is because if we look at the action that happened earlier in the day, the market moved down, we rallied, we did a liquidity hunt down here, and then we ended up doing some liquidity hunts up here, and now we've been kind of just drifting down for the rest of the session. And this big down move here kind of leads me to believe that we're going to remain weak. Now, the other pairs, we see the GBP right now is at an area where it also met some resistance up here, and the Aussie dollar, I believe, is kind of doing the same thing. So we're at another area with the Aussie dollar. We did a liquidity hunt down here, and now we're running up into resistance again. So I'm expecting the natural forces of the market to remain in effect since halfway through the London session, where all markets basically dropped, rallied, dropped, rallied, dropped, rallied, dropped, rallied. So I might actually even take a short here. Initially coming into the session, I had the Aussie dollar, what do you call it? The Aussie dollar was looking for my shorts, but then I kind of switched to the euro. Okay, so there's some questions here. Let me get to the questions. I apologize, guys. Jack asked, do the price actions on the hourly US dollar mean no liquidity? Does the price action on the EU mean no liquidity? On the hourly EU. Well, let me take a look at that. I change to an hourly chart here. So Jack is asking, does the price action on the hourly chart mean no liquidity? No, I think it's just random price action, to be honest with you. You guys can see I have a buy limit working down here. I do ultimately want to get long in my actual Forex platform. It doesn't mean no liquidity. It just means indecision. So the market participants have had a very good move, and now we're going into an area where they're not sure whether the natural supply and demand will continue to the upside or whether or not this area will actually prove to be things. So when I'm looking at the hourly chart, I'm not really saying lack of liquidity. I'm seeing indecision, right? More indecision than anything. Okay. Mike FX asked, markets seem very choppy. Also, I noticed you don't have many indicators on your charts. Is that the norm? Mike, I used to have a ton of indicators on my charts. And my attitude toward, let me just fix this, guys. My attitude towards indicators is that you should use whatever is making sense to you. Okay, you should view the market as you know, how does this make sense to me? And you know, if you're looking at the market, you want to more or less look at it from the perspective of what do I need on my charts to help the market make sense to me? Okay, so for example. You know, if an indicator will help you make sense of it, I have one guy that never traded ever before, right? So he's never traded in his life before. He's brand new to trading, and you know, if I put up indicators for him, it's to help him make easier decisions, right? So, for example, if I put up an indicator, I do have an indicator. Oh, I don't have it on this thing. Darn it. Shoot. This is a new platform I'm using. I'm doing some stuff with Trade and See to do some mirror trading. If I put up some indicators that, okay, let's just say, for example, what an indicator should do, and I have a whole webinar dedicated to indicators if you want to go look that up. But what an indicator should do is it shouldn't replace the natural price action. It can help you do things like stay on the right side of a trade. Okay? So for example, if somebody cannot see this is a back and forth market, which I don't know why you couldn't, you could put some indicators up that could help you make a better decision. Okay? And it shouldn't replace what you're actually seeing. What it should do is it should just help you make an easier decision with your trade. Okay? So I think that indicators are really a personal choice. You know, do you feel that an indicator helps you to make a better decision by using it? Then you should use it. Okay, if you feel that indicators only are going to cloud your judgment, then you should do it. Now, it's really entirely up to the individual. Some people can multitask very well, and I'm seriously considering a short here in this area adding to a short in this area on the euro here, guys. Some people can multitask really well, and some people can't. Okay, so indicators should be a very personal decision. Okay. Let's see. Other questions here. Boyke asks, "Hi, why do you trade on 5-minute charts?" I don't just trade on 5-minute charts, Boyke. I will trade on anything that I need to use in order to exploit the market. 5-minute charts are easier for me to get a general overview of the picture, but there are times I'll scale right down to a 1-minute chart. Let's say I wanted to scalp this area. Okay. Let's say I believe this was a resistance area, and I wanted to scalp it, and I wanted to get a really pinpoint entry. Then I'll go right down to a 1-minute chart. Right. I'm not afraid to do that. Right. A second, guys. I'll go right down to a 1-minute chart, and I'll see, okay, if this pullback, is there anything I can see on a 1-minute chart that will help me time my entry, right? So I'm seeing on a 1-minute chart, we have a down move, we have a pullback, a small liquidity run here, we have a down move, we're having a pullback right now. So if a 1-minute chart will help me get into a trade, if I believe we're going to go back down again, if a 1-minute chart's going to help me get into a trade, then I'll use the 1-minute chart, right? I'll use whatever time frame I see can help me make a better decision. Okay, I'm really liking this area. I'm really liking this area here. I think we're going to have another leg lower, and I'm just, I'll use whatever time frame I'm hunting in order to make my decision. Sometimes you got to be really pinpoint, and other times, you want to be more general. It depends on the market condition that you're trying to exploit. This is a pretty strong up move right now. I'm not really thrilled with it, which is why I got a trailing stop on. I have a feeling I'm going to get stopped out on this stupid trade, to be honest with you. I think the market wants to come up and maybe test this area. Any failure of the round number here will mean a lower market. We got 20 pip move from the lows, and we're bouncing almost right back 20 pips back to this area. So I didn't think we were strong enough to do that, but obviously we are. Now, if we fail to do that, I think the market can move 25 pips lower still from here. Okay? So I hope that answers your question, Boyke. I'll just watch what happens when we hit 31 here. We're going to test 31 here again. I'm going to do one of two things. I might even add to my position, because I'm short right now. I might even add to my short at this level, depending on what happens on this trade. I'm not liking this at all. Not liking it at all. I had a lot of profit. Ah, damn it. I just got my trailing stop just got stopped out. That sucks bad. Okay, well that happens, right? That's all I can do. I still like the short side of this market, and I'm still going to maybe get back into this trade. I had a feeling that we're going to get stopped out here. All right, so let me just watch, because I might re-enter. Had a feeling it was going to be tight.
Order filled.
Okay, I decided to re-enter this trade here. To the short side. Just watch it if you don't mind, guys. So this is an example where I have to be pretty precise. So I might, I'm going to use the 1 minute chart here to really give me some help. You can see the 1 minute chart is giving me a pretty good picture. We have moved lower, a pullback higher, and now a move lower, and now what I'm expecting here is another move right back down. I'm actually going to take the trade here on my platform as well too. Okay. I'm going to enter a short here as well too. And we'll just see what happens. Got a better fill on my futures chart than I did here. So as I can see here, this whole area here kind of was congestion. So what I'm thinking, what will probably happen now, is I'm thinking that the market will now use this area, either hang around this area quite a bit, or we'll go down and we'll make another low. I had a feeling my trailing stop was a little bit too tight on my initial order. So right now we're going to just have to see how this area now develops. Okay. Steve, Boyke asks, are you looking for scalps? Sometimes, in a market like the market we're in right now, you can sell highs and buy lows. I didn't really feel like I didn't feel like trading a lot today because I traded a lot yesterday. So really, I just decided to take a bigger trade with a larger target and just look for that trade to actually move in my favor. And probably today, that was probably a bad decision. Today, the better decision probably was to be more aggressive on my entries and exits, because my entries and exits are giving me much more opportunity here. All right, so depending on the market that you're in, you want to be able to scalp. There's a lot of people that say, I'm a scalper, or I'm a swing trader, or I'm a 5-minute chart trader. And I think that's flawed thinking. I think you want to not think like that. I think you want to think more along the lines of, what does the market have to offer me today that I can exploit? Okay. Philip asks, did you get your idea of your strategy from Reminiscence of a Stock Operator? No, Philip. Reminiscence of a Stock Operator, the book that I usually recommend to people, is more or less just for your mental preparation. I feel that if you study that book, the psychology in that book is more is what that book is good for, not so much for for strategies. Okay, but I believe that the best strategy is a good psychology. So that's my thinking. So I believe if you study that book and you understand the psychology behind Reminiscent of a Stock Operator, of how the markets operate, I believe that you can develop your own strategy from that. Okay? Boyke, where can we find your webinar indicator or your webinar indicator? I'm not sure. Check my profile. Should be there somewhere. I'm not exactly sure. If it's not there, then you might have to check someplace else. Chuck is laughing at me. Joji, why is the euro not going down even though we had some not so good news coming out of the eurozone? Basically, it seems to be acting quite opposite to the news. That's a very good question, Joji, and it brings into an important thing. Well, obviously, there has been a lot of buying. Look at my 1-hour chart. There's very, very strong buying sentiment on the euro right now, okay? And so we had some bad news coming out. And just because we have bad sentiment doesn't necessarily mean the market will collapse. So for example, today, the stock market had a terrible jobs number come out, and it has dropped off, but it hasn't dropped off as much as it should have, because there's orders all over the place that are just hanging around, right? And so it takes a while to turn a locomotion or a ship, if you will, right? If the ship is in the ocean, it's going to take a while to, and it's been going at a very fast pace, it's going to take a while to turn that ship around. Okay? Mike is enjoying my insight. Thanks, Mike. James, how many pips on that one? How many pips am I looking for on this one, James? Or Mike? Or James? Yeah, you're asking me how many pips I'm looking for on this one? Chuck says I'm funny. Thanks, Chuck. I try to keep a sense of humor when I'm trading. If you can't keep a sense of humor when you're trading, then you're in big trouble. I find the days that I don't have a sense of humor when I trade, I lose a lot of money. Seriously, I honestly believe that if you keep a sense of humor about you when you're trading, if you're laughing when you're trading, then you're doing well. Sometimes my niece will come over here. My brother brings my niece over to my place because I have a pool in the condo that I live in, and my brother will bring my niece over here, and I find that if she's here and they're out in my living room and I'm in my office trading, I find that if she's making noise and I'm pissed off about it, I find I'm going to have a bad day trading, right? I find that it's really important to keep a happy attitude. Like if my attitude is not good when I'm trading, then I'll shut things down, because you got to be in a good mood. Okay. The news will confuse. Yeah, I find, Chuck, that the news will confuse a lot of people. I don't even watch the news. I don't have it on. I don't turn it on. It only distracts me. I used to listen to a news service. It was a free news service, and man, they'd come out and they'd get all excited and they'd be like, "Oh, well, this is great. This is happening. This is wonderful. This is fantastic," and I'd be like reacting to the speaker on the news and like really kind of overreacting to the circumstances, right? Let's see what else here. Interesting today, as always. Just talking to trade. Yeah, Boyke, I can do two things at once now. How many pairs do I watch? I just watch the three majors. Edwards asks a really good question. Steve, why did you pick the Euro US dollar today? And so that's a very good question, Edward. And the reason I picked the Euro US dollar today was because I felt I saw the price movement on it. I was reading the price movement on it more accurately than I was the other pairs. The other pairs, I couldn't read the. Let me just go down to 5 minutes. I wasn't reading the price as accurately on the other pairs as I was the U.S. dollar. So there is another reason why I chose the U.S. dollar over the other pairs today, and that's because it ended up becoming the weakest pair later in the day. So if I wanted to take a short, I read that. So sometimes, sometimes I'll trade whatever I see that is the most obvious to me. Okay. Vicky asked a very good question. What lot size do you trade with, Steve, and what stop loss do you often deploy? Very like that, Vicky. You must be an ex-military person. I deploy a 2-to-1 risk to return ratio. So I will adjust my stop to my risk to return. So in this case, I'm looking to make a new low on this trade here. So I'm looking for about 20 pips worth of profit, which means I'm going to use a psychological stop loss of around 10 pips because I want to get 2-to-1 on it. So I will adjust my stop loss based upon the profit potential that I have per trade. If I'm risking 5 pips per trade or 50 pips per trade, it really doesn't make a difference to me. All that matters is my risk to return. Okay. Makes sense. What do you think of the trading market psychology using general chart patterns? Philip, I think chart patterns are, I think if you were just trying to trade off of a chart pattern, I think it's better, in my personal opinion, than using an indicator. It's my personal opinion. I think indicators are worse, will confuse more people than chart patterns will. The only chart patterns that I really found really reliable, and I used to trade a lot of chart patterns. One of the things I'll give you guys, if you wanted to trade chart patterns, there's one chart pattern that I think is really the best chart pattern ever. And I think it's an ascending or descending channel. Okay? When you're in a down market and you have, here's an ascending channel in a down market, okay? Let me just move this here. So this is an ascending channel in a down market, okay? So the market has been moving down, and we have this, the market was moving down, and we have an ascending channel. When the ascending channel breaks in a down market, I find that to be a really powerful chart pattern. And the opposite would be true. If the market was going up and you have a descending channel and the descending channel breaks, I found that to be really, really powerful. I know a guy that's all he trades. He found an edge there, and he waits for the market to move, and then he'll look at various time frames for ascending or descending channels on those time frames, and he'll trade nothing but ascending or descending channels. Now, one of the other patterns that I think is also very powerful is the head and shoulders pattern. All other price patterns I personally found to be very unreliable. Tell her to play outside. Borky, you're funny. Let's see what we've got here. Okay, Steve. The risk of fixed percentage per trade. Yes, that's a good question, Jake. I personally am a very aggressive trader, and I can risk anywhere between 3% to 5%. All right? But I'm an aggressive trader, and I'm used to, my background is, working at prop firms with stock houses. And so my background is, very aggressive day trading, where I would have wild swings in my accounts, like with a $25,000 or $30,000 account. You guys have seen my statistics. I used to make over, $150,000 to $200,000 a year with a $30,000 account day trading stocks. So I'm used to risking large percentages on my trades, on a $30,000 account, I used to have days when I would lose $5,000 some days. Yesterday, I think I lost. Not that much, but I think I lost around 2% yesterday. So, it really is, once again, a personal thing, right? Okay. Joji asks, so you basically trade technicals instead of focusing on fundamentals. I don't know really what I would call myself, other than I trade market flow, or I think order flow. I don't like the word. Price action. I don't like that word. Ganster asked me, what's taking me out of this trade? Again, either I'm going to hit my stop loss on it or I'm going to hit my profit on it. Very rarely do I change my mind in the middle of a trade unless there was some news coming out that would give me that reason to. Know the trade, the psychology of the charts. What do you think about the general charting patterns in Edwards and McGee? I think I answered that question already, Philip. I don't believe that chart patterns tell you psychology at all. I think that's a load of horse manure. I don't think that if you look at a chart pattern, you're going to see psychology. I think that's a very good salesman that kind of summed that up. I don't think that's the thing. I'm trying to figure out long-term trend. Thanks. You mean so? Philip asked. You mean fade the short-term trend in your favor of the long-term trend? Thanks. Once again, Philip, today is a day where there is no trend, really. Today we can look at these 5-minute charts and there's no trend. The only trend is chaos. Up, down, up, down, up, down, up, down. So I think you got to exploit whatever the market is giving you on that particular day. You mean as far as my ascending channel strategy is concerned? You need a big down move, and then you need an ascending channel, and then you need a break of that down move, and vice versa. So the 1-minute chart, we can see kind of it's not really, I'm just using what I see here. This isn't a very good example of trading a break of an ascending channel, but that's the only price pattern I feel is very good. 5% of my account balance, Gan. Okay. Steve, is it? Ahmed asked, Steve, is it said that most 90% of day traders move that? Is that your experience? Yes, it is my experience. I actually think it's higher than that. I think it's 95%. And the reason I think it's that high, Ahmed, is because I think that people don't get proper training. And I think that, this is why I offer my mentoring classes, because I think that you got to have proper training. Okay, I think it's very, very difficult to make a living from a trader without being mentored by somebody. Okay. Ahmed says people who make money from FX are long-term traders, not scalpers. I would disagree with that statement, Ahmed. I think that you can make money from trading whatever way you choose to specialize in, providing that you get the proper training. I don't think time frames matter. I think you can make a lot more money as a swing trader or as a position trader, but you have to have a large account. Oh, what are you doing to me? All right. So we're getting a little volatility in this area, and I was kind of expecting volatility in this area. Because of what's gone on over here, and I was surprised at this area. We can see here we held this kind of trend area here, but I am expecting volatility in this general area because we're at a very round number, and so the market's going to fight back and forth between it, and so it's it's something that I'm kind of expecting. Edward asks, what is your suggestion of mentoring if I can't afford it and just have $500 Forex account to practice on mini lots? If you can't afford, obviously, professional mentoring, Edward, or some type of coaching, then you're going to have to do it the hard way, unfortunately, and that is just by trial and error. And I'm not saying you can't make it as a trader by just using trial and error. I'm just saying that it's going to be harder. Okay? When I learned to trade, I learned from a floor trader, and I worked for a company, and they put me on the floor, and they made me shadow this guy for like 6 months or a year, right? So I had to learn from watching somebody else basically do something for 6 months or a year. Okay, but that doesn't mean you can't make it as a trader. It just means you're going to have to put in a lot of screen time. Okay. Phillips asks, do I like a 1-2-3 reversal? I don't really like that type of thinking, Philip, right? I don't really like that type of thinking. As far as this trade's concerned, by the way, guys, what I'm expecting to happen is if I don't get stopped out, is I'm expecting this trade to take a long time. I'm expecting this trade to probably not get filled to the downside until probably the Asian session, sometime during the Asian session. Boyke asks, see my last question. Retype it, Boyke, because I got to leave in 3 minutes. My session time is up. But as you can see, my general consensus is to turn my charts on, figure out what the market is doing, and then try to figure out a way to exploit that market condition. Back in this whole chippy-choppy freaking area here. Oh, why, Boyke asked me, why change from stocks to Forex? Because I'm managing accounts now, Boyke. I can't manage accounts in the stock market. I can only trade my own account. So because I want to manage other people's money now, I switched to the Forex markets because it's easier. Do I trade silver? Yes, I trade gold more than I trade silver. Okay. Gan asked a question. Well, because I'm looking at everything that has happened so far. So we see this 5-minute chart. We've had a chop, down, up move, down, up move, down, chop, 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 chop. I think the market's now going to wait before we make another leg down. I was hoping it wasn't. I was hoping we were going to get right down there right away when this move happened, and I wasn't really expecting this pullback to be as strong as it was. I thought we were going to go lower, but we didn't. All right, so that's my live trading for today. I'll do some more live trading sessions here at FX Street, and I think it's just more listening to what a professional trader is thinking than it is actually, making money. And I think it's a good opportunity for you guys to, ask me questions. Philip asks, do I trade breakouts or to wait for a pullback? I mostly am a pullback trader, Philip. I prefer pullbacks over breakouts personally. All right, well, that's it. And here's my information again. If you guys want to get a hold of me, please feel free to Skype me. I answer questions on Skype, etc. All right. So I'll see you guys next week. Same bat channel, same bat chime. Bye for now.